Today's discussion, we will dive deep, highlighting the recovering market cycle. This first graph shows 4 market cycles: recovering market, expanding market, hypersupply market, and declining market. Next is a donut or wheel shape. This also looks at the 4 market cycles. What I like about this is it looks at gradations in the market. Are we just entering? Are we halfway? Are we at the end of the cycle? This is from a website called IRR.com. It's under Viewpoint. It's worthwhile and definitely worth a look. This last graph is from Dave Lindahl. What I like about this graph is it focuses on who has the power. Is it a buyer's market? Is it a seller's market? We will look at what are the triggers and transition points between a buyer's market phase 1 and 2 and a seller's market phase 1 and 2. All 3 of these visuals are used to identify and signify where in the market cycle a certain city or market is positioned. Why is it important? Well, to gain insights and create a strategy to effectively operate in a current market. Should you buy? Should you hold for appreciation? Should you cash flow? Should you flip it? Should you wholesale? Should you sell? For example, let's say you have a property in a particular market yielding a generally expected return. Okay, if you take that same property and drop it into a recovering or expanding market, you can often increase your NOI by 2 and 3 times. If you take that same property and put it into a declining or oversupply market and use a different strategy, you can lose your shirt. So your market selection can dramatically influence your expected returns to your investors. So how do we reduce this risk? Well, first you need to understand where you are at in the market. This is your benchmark and baseline to build off of. Next, you need to develop a strategy that will work in your market. Then you need to execute on that strategy and then respond, reposition, re-engage. It really is a very active process, but so many investors often overlook this step. Today, we are going to focus on a recovering market cycle. What are the triggers, characteristics, and strategies to buy and sell a property in this type of market? Recovering market. This is called the millionaire maker. This is the best time to buy for long-term appreciation. Now, you're coming out of a declining market, you're on an upswing. Okay, so the market's beginning to absorb some of the oversupply, the time on market for properties is decreasing, job growth is increasing, optimism starting to happen. Existing properties are getting rehab. Some of the repairs, maintenance that wasn't taking place during a declining cycle is now starting to take place. There's still very little new construction hitting the market. Rents, you're starting to see rents starting to go up. That's another good sign. Builders and speculators gave up on the market. They came out of declining market. They're still not ready to start going full guns with building new construction. And essentially the market's turned a corner. You're actually seeing the bottom and it's starting to go up. Strategy. In a recovering market, what strategy should you employ? Well, this is the time to buy and hold and ride the appreciation pony. This is the time to buy everything you can get your hands on. If the numbers work and it's in the right area, buy it. Local prices have already been discounted coming out of a declining market. So paying current market rates is okay because values are beginning to rise. Now, cash flow can be thin because market appreciation will grow and the value plays will push your net operating income high. Today's market price is tomorrow's bargain. Remember that. Now, during this phase, buying at or near asking price is okay because sellers are coming out of a declining market. They often are shell-shocked from the previous cycle. Many times, local property owners don't even recognize the recovery first. They are way too close to see the big picture. They just want out. Now, you understand market cycles and can pick up incredible bargains at this point. Also, at this point, haggling down on a seller's price too much may actually lose you the deal. The seller's been through hard times and ends up selling the property to you just when their perseverance should be rewarded. We are watching what the city is doing to attract jobs. Are companies bringing back their jobs? This is your signal to take action. If a city is expecting to increase its labor force by, say, 3,000 professional jobs, then you can expect an increase in total employment to increase by 9,000 to 12,000 people. This is called the multiplier effect. This is a good thing. During the declining cycle, household sizes increase by offsetting living costs by taking in roommates. Get this, during the recovery phase, the need for labor increases, which leads to an increase in salaries. More employees with more money leads to more prosperity, and even more jobs are created. As incomes increase, people move into their own apartments, so apartment demand increases and occupancies rise, which make it possible to increase rents, and the genuine cycle of prosperity has begun. This is why I intend to buy everything and partner. Why partner? Because we can get into more deals with partners than trying to take down every single deal by ourselves. Spreading and sharing the workload is easier and safer and more enjoyable. And we're able to scale so much faster together. Now, taking down one deal virtually anyone can stumble through. I'm looking to take down multiple properties during this recovery phase. Several hundred units. That's right, I said several hundred units. It's better to take these down together as a team with partners than trying to do it myself. Look at it this way. I would rather have 50% of a watermelon than 100% of a grape. This is why the recovering market is so exciting and considered to be the true millionaire maker. I trust you now see the value of executing the proper strategy in a recovering market. Let me know if you have any thoughts on recovering markets. Check out our next video where we will explore strategies to employ in an expanding market. Make sure to like and subscribe to our channel. We drop new videos every Tuesday and Friday, so ring the bell to be the first to see our new content. I'm Phil Russo. Stay tuned and stay informed.